let's shift gears from one corporate voice to another then, and we've got Mr. VP Nandakumar. He is the Managing Director and CEO at Manappuram Finance, joining in to talk about the impact of COVID-19 on credit costs as well as the rising risk of delinquencies. Thank you so much, Mr. Nandakumar, for taking time out. Let's begin by just understanding how you as a company in the sector has reacted, or what has been the impact of the COVID-19 lockdown on business, on growth. What are some of the challenges that you are facing right now?
Yeah, Manappuram Finance, around 85% of the portfolio is loan against jewelry, gold loan. That 85% our contract period is 3 months. So nearly 50% of that is online gold loan, where the customer can transact online. So in that 50% regular transactions are taking place to the tune of hundreds of crores every day. So the interest collections are also happening. In the only thing, the gold loan portfolio, as it is 50%, the collections are also happening to the tune of 50%. So that's about gold loan. The balance is commercial vehicle loan portfolio, which is around nearly 7%, followed by some loans to other NBFCs, which is around 3%, and the balance, a small amount, is around SME loans. So this is the portfolio. So in gold loan, the collections are happening regularly. Even the accrued interest is very less. And we have provided the various payment solutions which are very customer friendly. We have 2 lending subsidiaries. One is affordable housing. There, after this 21st, the collections have come to around 40%. Because the branches are closed. So only online collections are happening now. So who are the customers voluntarily wanted to pay, they are paying. So the other vehicle finance, the microfinance, we have a subsidiary, Ashirwad Microfinance. There we have stopped the collection because that's the decision of the SRO, MFIN and Sadhan. So we are following SRO decisions. So, but we are in the process of offering payment solutions to the customers, because many of the customers are calling us. Even though there is a moratorium, some of these customers wanted to pay. For them, we are setting ready the various payment solutions, which is ready now. It will be launched next week.
Right, Mr. Nandakumar, if I may come in, I just want to understand, Mr. Nandakumar, the Reserve Bank has provided that 3-month moratorium on all term loans. How many customers have proactively reached out for the moratorium, and are you factoring in a case now of higher NPAs?
In gold loan, we don't expect much NPA because the customers are transacting, many of the customers. And we offer only a shorter duration gold loan. In commercial vehicle, yes, there can be some NPA because of 1 or 2 months the vehicles may not be plied. But our comfort is because our exposure is mostly into light commercial vehicles who have 1 vehicle or 2 vehicles, very few exposure to national permit holders and buses, etc. So that level of comfort is there. But again, we have not assessed the credit loss. But depending upon how it is prolonged, this lockdown period is prolonged, there could be some credit loss which is yet to be assessed. In microfinance, our risk management is, we believe, is better because we are across the country. In no state we have a portfolio exposure of more than 10% of our AUM. In no district, our portfolio exposure is more than 1.5%. Because of that, as it is geographically spread, and as the ticket size, maximum ticket size is around 50,000, we feel like the credit loss compared to the sector would be better, will be lower credit loss. This, as we have not assessed the situation because we are not sure how long it will get prolonged. We are not assessed, but we are trying to minimize the credit loss because whichever customers wanted to pay, we are in the process of offering them various payment solutions so that the customers who have money with them or who wanted to pay, they can pay.
Okay, sure. I understand you're still assessing it, but what's your outlook, Mr. Nandakumar, on both the gold loan as well as the non-gold loan segments? What do you anticipate? Will you see your product mix shaping in light of the kind of hit we may see on the back of this?
Yeah, I think so. The gold loan in the near future is expected to show a growth because when other credit lines are not very active for in the near term, it gives better prospects for gold loan growth. So the product mix, the percentage of gold loan is expected to go up slightly. So the other segments, yes, maybe more focus would be on collection even after this lockdown is lifted or moratorium is gone. It can be little slow, and the gold loan may be the sector which may grow as far as our portfolio is concerned.
Okay, and do you see any ALM mismatch due to the moratorium as well? How's that been across different periods, especially during the short term as well?
Our ALM is always positive because our major borrowing is, major lending is against jewelry. It's a 3 months contract. Our average borrowing is always positive. So our liquidity position, in the recent past, a couple of months back, we have borrowed through overseas bonds, which is around $300 million. So not only that, in the recent past, the last month, we got NCDs to the tune of around 1,000 crores from various institutions, which is all these are for a longer period of 3 years plus. So we are comfortable as far as the liquidity is concerned. Even gold loan itself is a highly liquid loan product because the average life of, even though the contract period is 3 months, the usual tendency is around 25% of the customers pre-close within 1 month, another 25% pre-close with another 30 days, and third month almost 75-80% of the customers totally used to pre-close. So the liquidity there is comfortable. So we don't expect any liquidity challenge there. In Ashirwad Microfinance also, we don't have a liquidity challenge. The reason is a large portion of the AEM has been securitized during March, so they also have sufficient liquidity comfort. So we don't intend to avail the moratorium in our borrowings. We make the repayments regularly, and we don't. We have not asked any of our lenders for moratorium.
All right, We'll leave it there. Thanks so much for joining us, Mr. Nandakumar, and we'll keep checking in. Still waiting to see how the situation evolves, keeping tabs, that's the word coming in, and definitely the gold loan segment doing slightly better. We're going to take a very quick break. Back with more on the other side. We'll take a check on markets as well, which still seem to be holding up so far this morning.